in the first instance. We undertook a detailed assessment of the sector. The system works in so much as the brand issues a license to the developer, who then sells it to the owner, and the owner has the advantage of being able to put the property back into the hotel's rental pool. A couple of examples here. The big trend, I think, is the fact that we have really seen a digital revolution, and it's fitting that we do this in partnership with HomeAway, because you've seen the likes of mobile platforms, instant booking, really opening up the rental market for people who own second homes, to let them out much more easily, really accessing a much broader demand base. And this in turn has obviously positive benefits in terms of occupancy and returns. The other big one is that we are now have been in a period of economic recovery, and most relevantly, tourism is in a growth period. So last year we saw a record 1.3 billion tourist arrivals, 7% growth, I should say 2017, and then most explicitly growth in the Mediterranean. So if you're thinking about some of those key European second-home markets, they've been performing particularly well.
Now, in terms of the sukuk, as interest is in particular is prohibited in any Sharia-compliant way, a bond which can be traded in the conventional market doesn't apply in terms of the Sharia-compliant funds. Use of the Sharia-compliant funds reduces the overall cost, and you have a wider universe. In the conventional market, of course, you will have the investors who will go for those, but they will not go for any investments which are not Sharia compliant. So you have a wider universe. You have much wider universe of people who can go into the market. Now the sukuk structure the sukuk itself represents a proportionate beneficial ownership of an asset for a defined period when the risk and return associated with cash flows generated by underlying assets as a pool are passed to the sukuk holders, that is investors.
Not just the driving pressure or the power or the styling or whatever it is. It takes a whole set of fundamentals that will convince you that one product or project is better than the other. Very true with real estate. So let us subject Altair, which is our development, to some degree of critical examination. Developers are from Calcutta in India. It's a JV of 6 conglomerates with a net value of over $6 billion US. They've already developed 50 million square feet of real estate, but that is only in India, and there's 20 million square feet of real estate in the pipeline. Now, Altair is their first venture out of Indian shores, and it would serve as a showpiece for future development that is envisaged. Most developers strive for a strong USP. At Altair, we are lucky and fortunate to have several of those. So you combine them all, you might have paid for a Jaguar to start with, could probably end up with something like this. Thank you.
Paper that gets shown around the office is those agreements that relate to specific sukuk issues or to large syndicated financings, but the vast majority that see is very much automated nowadays. Quickly on the UK Islamic finance industry itself, it's all about asset facilitation for us. Real estate has been a very important part of what we've done. Certainly there's some awards for real estate transactions and real estate facilitation in there as well. The Sharia Supervisory Board is something we're very proud of. I think RMD stuff has made a particular effort to ensure that in accordance with the best principles of Sharia. We have 3 Saudi scholars, we have a Kuwaiti scholar, and we have a Malaysian scholar as well. And I think that's testament to obviously the importance of the GCC, but also very much.
Just to maybe give an introduction, a very brief one to many of you who may not know much about what's been happening in Sri Lanka. So post-war, there's been what we call a peace dividend driven by very strong economic growth, boosted by tourism, increases in foreign direct investment. And one could argue more recently, much better governance, etc. And one of the beneficiaries of this has of course been the real estate market, which has enjoyed unprecedented growth. So just to give you an example, there were only some 400 luxury apartments 15 years ago, but today we're looking at some 17,000 units of luxury apartments.
Historically, real estate in Sri Lanka has done very well, especially over the last decade or 2 decades. There are those around the room who can be witness to that, with phenomenal growth. But on a sustained basis, I think it's prudent to say that that would be in the region of about 12 to 15%. To be very, very frank, this year has seen a bit of a slowdown, which has been brought about not by fundamentals, but by mindset. But that mindset has been proven to be baseless, as is shown by the fact that sustainability has not been affected at all. And I would see the capital returns returning to the 15% range in the very near future. Right at present, I think capital gains would be at about 10% year on year.
From a transactional point of view, in the last 18 months, I've seen an increase actually for overseas transactions. Prior to that, saying the 18 months before that, the transactions were lower, but in the last 18 months, I've seen an increase in transactions. And even though the capital gains may have come down, compared to investing, say, in Europe or in the UK itself, investing in Sri Lanka seems to bring a better return.
Yes. Yeah. Sure. From the residential apartment perspective.
From the residential apartment.
Yes, something which was not spoken so far is very, very soon, maybe within 1 month, there's this law which is going to be gazetted that if a non-national invests $300,000, they'll get a 5-year visa, $500,000, they'll get a 10-year visa, and a Sri Lankan who has migrated and wants to get permanent citizenship, they have to invest $100,000. So all these 3 categories, if you see their mindset, they would not want to enter and invest in Sri Lanka treasury bonds, or they'll be a bit confused in investing in the Sri Lankan stock market. So we expect most of this money going into apartments simply because you cannot buy a land or even buy a land and build a house. So residential apartments, we would get an increase. There were some unwanted comments made by certain government officials about the residential apartment market, probably because they were thinking that the previous government's money was in the apartment market and they wanted to control it, but it is unfounded. And what is now happening, the newest trend in the last 3 months is that about 30% of the apartments are not coming up, although they were planned to come up. So the supply, and further there won't be any more apartments going to be viable to be built, because the lands which were 5 million in Colombo 4-5, now if you want to buy 40 purchase, it would be 15 million plus. And over 2 years, as I told in my speech, that the BOQs have gone up more than 35%. So therefore, I don't see many more apartments coming up in the future. 70% which is being built will be built and finished, and still it is only 1% going to 1.5%. So I don't know why people think there is an oversupply. It's not that. And I also disagree with Pradeep's thing about the returns going to be only 10 to 15%. In our in what we have invested and what clients have invested, they have got more than 100% in the last 3 years.
I mean, whatever anyone says, Sri Lankan properties have done well. Like I've got a couple of houses in Colombo 7, and it's gone up 10 times in the last 6 years, or 7 years maybe. And my beach land in Balapitia, I bought a perch for 1.5 lakhs per perch. Now I've got 13 acres now, and now it's about 1 million plus. You guys know, you said you're looking down south for beachfront land, you're looking 1 million or 2 million a perch. It's gone up 10 times. Where else in the world can you get that sort of capital gain?
How can Sri Lanka compete in this growing market? I mean, in your opinion, what needs to happen? How can we compete with Spain, etc.?
Sure. First of all, thank you very much for having me on the panel. And to answer that question, I think post-war, it's very important to understand how the country is going forward. And it's very heartening to see a lot of these global brands moving into Sri Lanka over the past few years, which gives a lot of investor confidence. And from GrowMore, the organization that I am at, we have a wide base of investors from Middle East to Southeast Asia to Africa to Europe, all across. And one of the biggest things that gives them comfort is looking at countries. Obviously, you look at GDP and the generic macro factors that that allows a country to go through. And they look at these big brands, and when you look at a country going forward, that gives a lot of heart. So the first thing I think that the biggest opportunity that Sri Lanka has right now in terms of attracting investment, and I'm going to be specific to UK purely because we're based here and we give a lot of advice from here. And I think the biggest opportunity that's coming right now is Brexit, in my opinion. And as much as you can look at it, and obviously there are two sides of the coin.
Why is that?
I'm just about to get to that. So you look at Brexit, and you look at the first thing you say is, UK breaking up with the EU, etc., etc. But it opens up a lot of opportunities for the UK to trade with other parts of the world. And Africa has been very predominant in taking a lot of these actions. And a lot of our projects at the moment, a lot of the funds that I actively am involved in, we're working a lot with the African governments, a lot of the private investors, high net worth institutional investors, wanting to go into Africa purely because Theresa May was hopping around Africa not that long ago. It's a dancing around rather, if you could call it that.
How you see this in terms of a creative and design perspective, and is Sri Lanka also embracing green technologies?
We can be fortunate and we can be unfortunate. The fortunate part of it is that, I'll start with actually the unfortunate part. In any developing city, you will see a transition of development. People mature into the market, people understand. I think previously apartments were sold on the number of bedrooms, now it's square footage, parking, unique selling points, whatever it is.
A summary of certainly people have enjoyed massive returns in the last 8 years by enjoying early mover advantage. So what is the current market, what can an investor expect in the current market? Start with Pradeep.
Always maintain that integrity in communications and in transfer of information is vital.
To move the diaspora.
Yeah, can I go back to a very pertinent question about inconsistency in policies? I sympathize all of you all who have that idea. I agree. Basically, the previous government, I'm not here, I don't want to get into argument, I'm not here to talk politics, but the previous government, there was no capital gains tax in shares and property. And we as developers, when we developed, our income was tax-free. But this government came and they put capital gains tax. Then there was a VAT, 15% VAT scare on 31st March 2018, which finally didn't get implemented. Then on 16th August, they have gazetted it from 31st March 2019.
I've got two boys, 8 and 10, and practically every other weekend we go down south. Right. So this is how we look at it. We are from Colombo. We go down there, we spend well, and they have identified that now. You have got isolated incidents that happen, which is then just completely blown out of proportion due to social media.
Right.
But when you get to the crux of it, that may not be the case.
Okay.
You have got Arugambe and Ikkadua,
Right.
which is more or less a, how would you put it, an entry-level accommodation, beach, hangout, chill-out area.
Right.
Then you've got Unawatuna, Bentota, Valapekya, these areas. So there is a perception, Mirissa also. Yeah. Then you have a perception of, I'm from Colombo,
Yeah.
and we do go down there, it's safe.